Well, happy Friday and way to make it to the end of the week, huh, Gino?
Yeah, and in fact, it's the beginning of May, and April's past us, so we finished the first quarter of the year already, Don.
So thank you for joining us on the National Real Estate Cafe with Don Gelling and Gino Franti. And today we're going to give you a little synopsis of what happened this month.
Yeah, we talked a little bit about the Fed. The Fed is always, everybody's listening to the rate hikes, rate hikes. When are they coming, Don?
Well, why should you listen to the Feds? Do they have anything to do with interest rates?
Yeah, they control short-term rates, and this is where the misconception comes. Everybody says they control rates. No, they can only control short-term rates. So usually lending that happens in very, very short increments of time. Long money or long bonds, which is what controls the interest rates that you pay on your home mortgage, are controlled by bond investors, usually international investors as well as institutional investors, Don.
Yeah, and we're talking big money. We're not talking like you and I would invest. We're talking hundreds of millions of dollars, if not billions of dollars moving in and out. So what the Fed says, Gino, kind of matters. So basically all this mumbo jumbo, they talk in tongues. So basically they've been warning or threatening that we might have higher interest rates in the future, but bottom line is they're waiting for the economy to fully rebound. They want to make sure the job market's stable, income's stable, the economy's stable, and so forth. And they're still waiting. The job market has been improving, but we haven't seen inflation. We haven't seen income growth, and that's what they're waiting for. They do not want to stall our very slow improving economy.
Yeah, and I think that one of the reference points is going to be GDP, right? GDP was atrocious, the worst GDP number we've seen in a really long time. But don't forget, that's on the heels, as Don and I always talk about, three really hot GDP numbers the last 3 quarters of the year. So if the first quarter of the year is lackluster, that's okay. We can have 3 more smoking hot quarters, which is what I predict is going to happen.
Yeah, I agree. We're going to have a big pop back up. But it has slowed the talk of the Fed's raising rates. So take advantage now. What does that mean? One of the things you're watching, of course, is this next chart, jobless claims. We show you this trend.
Don's favorite. He loves this report, and I do too. I think it's a great report. And in fact, what's really nice to see, multiple under 300,000 initial claims, 2 of them at best in 15 years.
Best in 15 years. So 8 reports under 300. That's a good sign. What we don't see and why we aren't seeing rates go up is a lot of income growth, and we need income growth to get spending and so forth. So it's moving along slowly. How has this affected interest rates, Gino?
Wah, wah.
We warned you.
Yeah, rates are up from recent lows, but we couldn't sustain those lows. Those lows, when we see them, we have to lock in and take action. The good news is if you're looking to buy or refinance, rates are still fantastic. They're just 0.25% off roughly where they were at recent lows. And it doesn't mean we're not going to go back to maybe split that halfway, maybe sometime next week. We see a little recovery. We got a little bit of support now, maybe going to come back a little bit.
Everybody's trying to determine what the Feds are saying.
Yeah, and everybody gets spooked on Fed Day, right? Everybody's always spooked about the report. So I say we're looking for rates to improve a little bit. Consult with someone now and hopefully lock your rate next week.
All right, yeah, have a great weekend. Thank you for joining us on the National Real Estate Cafe. Check us out on nrecafe.com.